Well, good morning, everyone. Thomas Montgomery here. We get together most weekday mornings with our distribution partners to talk about strategies, share success stories, tips. We're here to support each of you. Today's focus is going to be mostly oriented to our regional vice presidents. We have a number of you. Well, we have one regional vice president for just about every state in the country. Our regional vice presidents may also be white label partners, but specifically our regional vice presidents are leading the way in building our distribution system, our distribution partners. So in other words, each regional vice president is responsible for a state and is out developing the network of white label partners so we can help more small businesses, increase financial literacy, build more loan packages, help those individuals get the capital that they need to start or grow their business. So those of you that are regional vice presidents, thank you for being on the training. If you're not an RVP, you're certainly welcome to sit in on this discussion, but it is mostly oriented to our RVPs. Those of you that are regional vice presidents that hit your numbers last month in September, we expect to see you in San Antonio. We're all flying in on Friday. You should have your plane tickets. You should have the hotel reservations and our agenda for the fun weekend. If you're not a regional vice president but would like to become one, email us, let us know. We'll see if your state is open. And if you are one, of course, this is extraordinarily relevant. So let's go ahead and dig in. So we're going to take a concerted focus in each state to make sure that we have a local white label partner in every county. And while white label partners certainly do not have to be insurance agents, we do need to have an insurance agent in each county to be available to meet with clients and write the key person policies. So I just want to make sure that all of us that are RVPs have clarity of what our focus is this month and going forward. So we're going to be building a national team of insurance agents. We're not trying to recruit those agents away from where they're at. They're able to write these key person policies with whatever carrier provider that they want. They can decide if they want to use a term policy, whole life. A lot of them are setting up indexed universal life, so it serves as asset protection and also has the growth component. We are not restricting the agents and where they write the policies or how they write the policies. They'll do what's right for the client in terms of suitability. But what we do want to make sure is that those of you that are RVPs are laser focused on getting your team built. So I see a lot of names on the training. Take Warren, for example. Warren, it's extraordinarily important that we build out the distribution team in your state. Same with the rest of you. You might say, well, what's in it for me? We're going to go through and talk about the financials here. First, why do we need insurance agents? We need these insurance agents to write the key person policies called KPP. A key person policy can serve as a collateral assignment for the loan. So an insurance agent is needed to write that policy. So is it okay to be a white label partner and not be an insurance agent? Of course, but we do want to have an insurance agent in each county. And so different states have a different number of counties. I guess some states have no counties, like Louisiana has parishes, but you understand the concept. So these insurance agents are going to be set up as white label partners under the RVPs. No different than what we normally do. It's just in addition to them being able to be paid as a white label partner, they're going to also be writing the key person policies from their book of business as well as others. Let's talk about what's in it for you. If you're a regional, again, if you're not a regional vice president, let us know and we can, our contact information is here on the bottom page. But if you're not an RVP and you want to become one, let us know. But if you are one, then you should know the way you're compensated is you're earning 2.5 points override from the production of the white label partners on your team. So let's use Florida as an example, but of course you could look up how many counties are in your given state and work out a similar economic model. In the state of Florida, there are 67 counties from my understanding. So could our RVP of Florida please confirm that I'm correct? Does Florida have 67 counties? Those of you that are RVPs in each state, if you would go ahead and put into the Q&A how many counties are in your state. I'd be interested to see how many counties are in your state. I don't think our VP of Texas is on at this time. Texas has, I think, the most counties of any state. Ohio has 88 counties and so forth. So what we want to do is make sure that we're bringing on an insurance agent who will serve as a white label partner as well in each county in your state. And again, if you're a regional vice president, this makes a lot of sense. If not, you're welcome to listen in, but I realize it may not be applicable to you. But we're going to use Florida as our example. So if each county has one insurance agent, one white label partner, and we know that we want to work with our white label partners to help at least 8 clients a month, and we know that a white label partner should be generating gross profit of $12,500 per client. Where does that come from? $2,500 from the refundable deposit, which can be refundable or non-refundable. It's up to the white label partner. And then assuming $100,000 capital raise with a 10% performance fee. That's where the 12.5 comes from. You and I know that the white label partner can charge more or charge less. However, that doesn't influence the amount of money that you, the RVP, makes, because you're making the flat 2.5% override. So if the white label partner wants to have a higher performance fee, that's up to him or her. If they want to have a lower performance fee, that's up to him or her. But regardless, you as RVP are making a steady 2.5%. But we'll get to your comp in a second. Let's stick with the white label partner. So the white label partner is helping 8 clients a month, generating 12.5 of gross income. So they're sitting there on a 6-figure monthly income. Does all that money come in up front? Of course not. But from the time that the client signs up with a white label partner, the white label partner is able to go over to their QuickBooks and record an accounts receivable. They'll get part of that with the first tranche of financing that the client receives. They'll get the rest of it as the client continues to raise more capital. So that's all good. But for those white label partners that are insurance agents, they have a tremendous additional income stream. They're going to write the key person policies. If you go out and ask any life insurance agent, hey, would you like to write an extra 8 policies a month? I would suggest that almost all would say yes. That would be a really good deal, big deal to them. How much they make per policy depends upon how they're designing it. But let's just assume on average, that will probably about double their income from an insurance production. Plus you're giving them a whole nother stream of income that they didn't have that's not conflicting with their insurance sales. It's in fact the door opener, the lead generator. We're not asking them to sell policies somewhere different or do it different. We're just saying, will you please, please, please sit down with these clients, do a financial needs analysis, and get them set up on a key person policy. In most cases, these key person policies will be paid up front with an annualized premium. If you're an insurance agent, you see the benefit of that, right? There's no chargeback risk. Now, what's in it for you as an RVP? Well, it depends upon the state you're in. So if you're in Ohio, you have 88 white label partners that you need to recruit. And of course, you have a higher earning potential in Ohio than you do in Florida because of the number of counties. Let's go to Georgia, for example. Georgia has 159 counties, if my intel is correct. My goodness. And so that's more than twice this. But when you go out and recruit white label partners with a specific focus, you'll be more successful, because what you're doing is you're identifying typically the independent life insurance agents in the county, reaching out to them and saying, hey, look, I'm looking for one insurance agent in XYZ county. No cost to be part of our initiative. We're going to be working with small businesses. You'll be exclusively writing all the insurance policies, including a key person policy that's needed for each client. And you and I both know most people don't have their assets protected. So a lot of these folks will have other insurance needs. You're going to get a lot of interest. So those of you that have been RVPs that have not been really keeping up with much production, then this is a great strategy to resolve that, right? Because you're focused on finding a independent life insurance agent in each county in your state. So again, back to what's in it for you. Well, we know that you're going to earn the 2.5 override, or around $2,500. Now, granted, if the client has more than $100,000 capital raise, you're earning more than $2,500, but the guarantee that we offer them is $100,000, so we'll use that for our projections. So in Florida, for example, again, this number will be bigger for those of you in states that have more counties like Ohio and Georgia. But in Florida, for example, if we have 67 insurance agents that are white label partners, they're doing what they promised to do, which is to help just 8 clients a month. Then there's 536 new clients in your state per month. That's 536 new insurance policies being written. That's 536 new clients that we're helping get the capital to start to grow to reach their potential. So if you're the RVP in this hypothetical situation, Florida, then 536 clients, assuming that you've done your job to get us an agent / white label partner in each county of your state, times 2,500 is a lot of money. Now, this is not going to all happen at once, but we're going to need to have a plan to first identify who are the independent insurance agents in each county, and we need to reach out to them via phone call, text, or email, whatever you would like. Essentially, the proposition to them is, hey, you can become the insurance agent for XYZ County, write these key person policies, and also we'd like you to be one of our white label partners. Didn't cost you anything, and it's a great way to generate an extra 6 figures a month. So let's open it up for questions. And this is really mostly oriented to those of you that are current RVPs, which we have quite a few of you. What questions do you have about following this directive? So if you want to recruit non-insurance agents as white label partners, perfectly fine. But we still want you to have one white label partner who is an insurance agent in each county in your state. We want to have that coverage. We'd prefer those agents sell the key person policies face-to-face. Doesn't have to be, but that would be the preference. We want to provide good geographic access. So those of you that are RVPs, Warren, Doug, Frankie, others, who has questions regarding our directive, our focus? Some of you are insurance agents. And that's what DeWood's pointing out, and that's perfect. That's perfect. So you've got yourself covered for your county. That is excellent. I mean, you're the one, DeWood, you're the one keeping track, and Frankie and Doug and Warren, others. So create a little spreadsheet or on your notebook pad, list every county out, and then next to it, write the name of the insurance agent that you've brought on that is generating overrides for you. That's the white label partner. So if you're an insurance agent in your county, put your name by it, right? But for all the other counties, those are open. We need to fill those. That's what you're expected to do as a regional vice president, is bring to the table white label partners. And what we're asking you to do in this discussion today is bring one on that is a licensed insurance agent in each county in your state. So DeWood, how many counties are in your state? Frankie's asking a good question about overrides on the insurance commissions. That is up to you, Frankie, how you want to work with those agents. If you want that to be part of the comp, then you work that out with them, and that's between you and them. That's fine if you'd like to do that. So maybe you want them to sell policies through your carrier or through your IMO. That is up to you. I know some of you are with WFG, World Financial Group. Some of you are with Primerica, where you have kind of a network model. That's all up to you. We're not intruding on that. But yes, if you certainly wanted to tap into the revenue stream in this example of the extra 500 policies written per month, great. But that's between you and your team of agents. What a lot of us know is that, and I hinted towards this before, the typical small business owner doesn't just need a key person policy. They probably have other asset protection needs, maybe for themselves, for their dependents, for their employees, if they're that large. They may have a business partner they need to buy, sell. Maybe they're leaving a current job and they have there's an annuity opportunity. I mean, all of that is fine. But what you and I are doing is getting these insurance agents who are white label partners in front of the small businesses to be able to identify the needs that the client has. Certainly, we want to get at least the key person policy. But Timothy, you're absolutely right. Most of these folks will need more than just a key person policy. All right, Pauline asked a good question. And so if you have, it's up to you. You're managing the state, Pauline, and the rest of you that are RVPs. So let's use Florida, for example. Is Tampa in Hillsborough County? I'm pulling from memory. Can anyone confirm that, just so my example's right? Is Tampa in Hillsborough County in Florida? Oh, yes. Okay, great. So let's say that we have a white label partner who's an insurance agent in Hillsborough County, Tampa. And Hillsborough County is large, right? You could certainly argue that we could benefit by having more than one. That's up to you. You're the RVP, you're running the state. And so if you want to, I think you'll get the fastest recruitment if you offer geographic exclusivity. So if you were to tell, let's say that you're having conversations with 3 or 5 insurance agents in Hillsborough County, Florida, or wherever each of you are, and you say, look, I'm looking for one that's going to be our dedicated agent to write these key person policies. You'd also be a white label partner. Do you want to sign up? Cost you nothing, right? I think you'll get the best traction. So Pauline's question is, can you have more than one agent per county? That's up to you, right? I'm giving you a strategy to go quickly build a team of white label partners, and you're running the state. So if you want to have some counties where you're having more than one agent, that's up to you, but you're managing them and their expectations. All right. And so Doug's asking a good question. So what I did not mean to suggest is that we're going to limit each county to one white label partner. There's no effort, or we're not suggesting that. The more the merrier on white label partners. So I didn't mean to say that we were going to limit that. I'm saying that we should have one designated insurance agent who is also a white label partner per county. So in Hillsborough County, we might have 10 white label partners, but we have one dedicated insurance agent that's writing the key person policies. So hopefully that's clear. Yeah, we're not dividing the country up and saying, oh, we're only going to have one white label partner per county. That's not the case. White label partners are welcome to help clients anywhere in the country that they want to. And so we live in a virtual world, a virtual society. However, my point was, if you're the RVP and you're building out your network, if you offer geographic exclusivity of one per county, you're going to get a lot of traction. That's what I meant to say. All right, so who else has questions, comments? I see we've got a number of states. We've got our RVP of Illinois on the Zoom. What are your thoughts about using this strategy? And let me ask Terrence, how many counties are in Illinois? Does anyone know how many counties are in Illinois? I looked up Florida beforehand, but I didn't look up every state. But that's where you'd start. You know, if you're an RVP, simply Google how many counties are in my state, or whatever, insert state name, and you'll get a number, and you say, okay, well, that's how many white label partners you should have a goal to go bring on. And then we need to start identifying prospective insurance agents. How do you go about doing that? Well, there's a number of ways. We've talked about Sales Genie, which used to be called Reference USA, Data Axle. You can do a query on there for free and find out how many insurance agents. But insurance agents tend to be pretty visible. There's other databases and lists. There's insurance, the Independent Insurance Association. It's called NAHU, N-A-H-U. I used to be on the board of NAHU, or of the local region, Dallas-Fort Worth at the time. So it was called DAHU, Dallas Area Health Underwriters. But figure out who the insurance agents are. Obviously, you're not going to get the same traction. I wouldn't go to State Farm agents. I wouldn't be going to anyone that's in a captive model, but it's the independent insurance agents that this is going to resonate well with. Again, for those of you that are plugged into Primerica or World Financial Group, this is a home run for them, right? This is going to allow them to have a better way to develop prospects with small business owners, go in and do their dream mapping, their financial needs analysis, get the key person policy set up. It's magical. So is our program based around only working through insurance agents? Absolutely not. But do insurance agents probably have the best fit for what we're doing? Absolutely, because they can double the benefit. They can make all the money and do all the things that a white label partner does. And in addition to that, they're able to sell these key person policies. All right, who has questions, comments, concerns on this strategy? If you're an RVP and you want to remain an RVP, man, we got to show results, right? We got to be building out the distribution network in your state so we can go help more small businesses and get these white label partners making the money that they should be making, and you're earning the overrides. Everybody wins from it. We've had a handful, and I say this respectfully, we've had a handful of RVPs that came aboard, and they're essentially almost seemingly doing nothing. There's no white label partners being recruited. So this is a strategy that you might want to use. If you want to remain in that leadership role, then we've got to show production. And this is a strategy that will work. We're here to support and assist you. Anyone have any questions, comments, concerns on today's topic, which is really oriented towards our RVPs, which I realize not all of you are an RVP. Now, if you'd like to become one and you're not, then just email us, text us, prefer you not call, but email or text us and let us know that you'd like to be an RVP and what state that you propose to be the leader of. We're starting to get together with our RVPs on a monthly basis. Again, a number of you will be there with us this weekend on the Riverwalk, and we'll all be going to see the Alamo. I think our tour at the Alamo is noon, if I recall, on Saturday, so we'll have a great time. If you didn't make this incentive trip based upon September, no worries. Get on track this month in October, and you'll be eligible for the November trip. Anyone have questions, comments, concerns on what RVPs do, what the importance is of building out our distribution system, how to use a strategy of recruiting insurance agents to be white label partners within your state, and or if you have questions about how you're paid with overrides. Anyone have any questions, comments, concerns before we wrap it up today? All right, well, thanks everyone. We'll see you back tomorrow morning. So we'll be here tomorrow, and we will not be together Friday because many of us will be traveling to San Antonio for the RVP get together that we're having over the weekend. And if you didn't make it, make the incentive trip for this month from last month's production, no worries. ramp it up this month, and we'll see you next month in person. Thanks, everyone. Have a great day.